Leslie Pickard joins us with the key takeaways from the regionals. Leslie, good morning.
Hey, good morning, Sarah. Yeah, take a look at shares of Regions falling on results and a downgrade by analysts at Wells Fargo. At issue here, Regions guidance on lower than expected fees and net interest income. That's that profitability metric for loan making. Mike Mayo in his downgrade note saying, quote, "This is not yet the time for most plain vanilla regional banks unless they are a takeover target or have extras." PNC, on the other hand, benefiting from its extras with a jump in capital markets fees. Those shares higher today, the best performing of the regionals cohort. The firm's capital markets and advisory business surged 41% year over year, and that really mirrored the activity we saw from Goldman and Morgan Stanley yesterday. M&T shares, however, those are lower with net interest income missing consensus. Fee revenue did better in the quarter, but guidance came in a bit light there. Additionally, its net charge-offs of essentially the percentage of loans that it expects to be uncollectible that did rise from a year ago. Also within the financial space, State Street reporting this morning and shares there slumping more than 3%. Investors were spooked by the firm's expenses, which were greater than forecast due to technology spend. Management also lowered NII and fee guidance as well. So investors will be looking for more color on State Street as that analyst call begins, in about a half an hour from now, guys.
So is the feeling on regionals generally, Leslie, that they're not benefiting as much from the capital markets activity on deals and IPOs and that sort of thing, and not as much on deregulation, or are they? And what is the gap in terms of sentiment right now?
Yeah, no, I think that's a really good read. I mean, PNC does have a pretty significant capital markets business, particularly advising middle market companies on M&A transactions and the like. So that's why you see this bifurcation between the regionals, those that are a little bit more levered toward capital markets businesses doing a little bit better, those that are more levered toward just kind of plain vanilla banking, maybe less so. And to Mike Mayo's point, the potential deregulation benefit for the regionals is just the opening up of consolidation, the option to consolidate and merge within the industry. Companies and regional banks that are seen as potential takeover targets are going to do better than those that are maybe less attractive in that potential consolidation push. And so that's why you see kind of the difference between a PNC of the world that's benefiting from capital markets versus a Regions, which most on the street don't see necessarily as a takeover target at this point in time.
And just really strong growth, 21% earnings per share growth for the year. Thank you. PNC
yes,
up 3%.
Exactly.